And welcome to my morning report analysis videos on Thursday 15th of March with me, Rich Perrin, market analyst at Hantec Markets. There has been sort of a shift back in risk sentiment really in the last few days. The sort of renewed fears of trade tensions and trade wars between the US and its trader nations have resurfaced again, and China being the big focus. The suggestion that the US is preparing a big package of trade tariffs for China to have to swallow, and how that's going to sort of impact on not only global trade but also directly on China and the reciprocal reaction to that move. So it could be that we're now starting to see renewed sort of safe haven flows coming through. You've got the dollar, which is sort of it fell away in the last couple of days, sort of settled to an extent since then. But it's interesting that we do still have this negative dollar outlook, I think, in a longer term basis. But the market is sort of buzzing around a bit, certainly on the forex trades. But what we did see yesterday is the S&P 500 falling away again as equities came under pressure. The sort of potential for sort of industries to be targeted by not only the US move but also then back from China. So the stocks such as Boeing got hit as suggesting that there would be a reaction in the aerospace industry, for example. So that's hit US stocks yesterday, but European stocks have opened fairly reasonably actually, and it's interesting that we are seeing a bit of a consolidation move. Really, the very I say consolidation, sort of more sort of choppy, really, sort of up and down in the last sort of week or so in these European equity markets, lacking real trend direction, and you're sort of seeing that basically across forex majors really as well, and also the oil price. I'll show you the oil price, which has sort of been fluctuating in the past week or so, not really showing any real trend, although there is an interesting downtrend still going on, and but the support seems to be underlying around about $60 at the moment, and that is holding on WTI. But as I said, the dollar sort of holding up, but not really showing any real decisive near-term direction, and as I said, that is sort of being reflected across some of the forex majors that I'll show you in a bit. Now, in terms of markets, economic announcements, not a huge amount today. We've had the SNB this morning, holding rates as you can expect at 0.75% negative, slightly tweaked down its inflation forecast. So subsequently there was a very slight move on the Swissy, but nothing significant. And then into the afternoon we've got a couple of Fed surveys. New York Fed manufacturing slightly improving on last month, apparently up to 15, slightly negatively on the Philly Fed, down to 23, but still a very strong number. Jobless claims 226, and the NAHB, that's easy for me to say, National Association of Home Buyers in the States, give their housing market index, expected to tick mildly lower to 71. Now, my chart of the day is the Kiwi dollar. Now, Aussie and the Kiwi have been improving in the last sort of couple of weeks. I did the Aussie yesterday, and now looking at the Kiwi, we can see this uptrend that has been forming recently, and that uptrend is basically within this sort of sideways trading band between 71.75, 74.35, so sort of around about 260 pips of range. Now, that improvement in the market in the last couple of weeks has sort of been driving higher lows and higher highs within sort of an uptrend channel. And what we saw is early today we saw a dip back on the Kiwi on the back of very slightly disappointing growth GDP numbers for New Zealand. However, this is still holding support, and interestingly enough, 73 big figure comes around these old highs. Now, there is a sort of on the hourly chart you can see, sorry, that's the wrong chart. On the hourly chart, you can see this improvement with the market in the last sort of couple of weeks, and turning around, being and using the old pivot around sort of 72.95 towards 73.10, I believe it is. as sort of a basis of support near term, and you can see that coming in, that basis of support, these old lows and late previous highs as well coming in. Market finding support there and turning around. Now you've got the momentum indicators. 35 on the hourly RSI seems to be a level in this recovery where the market starts to come back in to support it. MACD lines back towards neutral, beginning to sort of turn a corner again. So it's interesting that if the market can hold up above 73 figure also, the black line, which is the 144-hour moving average, having been a base of resistance, has now turned supportive. Again, that comes in bang on 73 figure. So 73 figure seems to be a bit of a level to watch now near term. So if that support holds on this little correction, it could again be another chance to buy. So watching out for that level, and also the 72.80 support of that reaction low we saw on the 12th, which is Monday, and that is a reaction, a higher low within this move. So it certainly looks as though this uptrend is building on the Kiwi dollar, and the fact that the market has found support at 73 figure and bounced today is positive. So the longer that support holds, the more the bulls will gain in confidence, and look at these momentum indicators with the MACD lines crossing high, RSI rising above 50, and the stochastics also rising. So it's looking fairly positive, I think, on the Kiwi dollar to continue this range and pull towards the highs. So I wish you good luck in your trading today, and I'll speak to you later.